Good afternoon, everybody. Thanks very much for joining us here at the Investor Lunch. Great to see so many people here. And we're looking particularly at the residential side. And for those who don't know me, my name's Richard Betts. I'm the publisher at Real Asset Media, and we publish Real Asset Insight and Real Asset Impact. So we're looking at both the general trends in terms of the industry, but also the trends related to ESG, social impact, and obviously residential has a significant social impact. And we're going to be picking up around, I guess, some of the a presentation from Irina, just looking at what we're seeing on a European scale, and then drilling down a little more into the panel. And obviously, Courtney, there's a big focus as well in terms of FDI and investor interest in terms of cities and this residential side.
Absolutely. Hi, I'm Courtney Fingar. I've joined the Real Asset Media team some months ago to bring a foreign direct investment focus into the group because of the important links between real assets and foreign direct investment, especially because the corporate occupiers are those foreign direct investors, and they're the ones that ultimately create real estate demand on the industrial and office side. But where the link comes in with the livability is not only those workers need places to live, but the livability is a crucial factor for companies in their site selection, and becoming increasingly so. There are many studies that post-COVID quality of life ranks much higher as investment criteria for companies when they decide where to locate. So we're just working together to join the dots between corporate occupiers and how they function as foreign direct investors and investment in real assets and the kind of link between those. And so I'm looking forward to this discussion. I moderated the session the other day, co-organized with us in Holland Metropole, where we talked about livable cities. And of course, the cities of the Netherlands have great stories to tell because they were very focused on these kind of factors long before everyone else. So I'm looking forward to hear what we can add to that discussion through this panel today.
Great, thanks. So Irina, let me hand over to you.
Perfect.
And it would be great to and I think because we're all here, we can give ourselves and Irina some applause. Thank you, Irina.
Well, good afternoon. I'm glad to be here. My role today is really just to set the scene and kind of talk about the landscape of European residential living sector and put the Netherlands a little bit in a context. So I think it's always good to start with the size of the market. If you look at the evolution in terms of the growth as an invested universe for residential, and here I'm looking at the data for both residential and student housing, listed and unlisted, you can see for yourself the extent to which there has been quite a lot of increase in capital coming in. So threefold in the last 7 years alone, was the biggest portions either in the listed side or in the non-listed fund side. If you look a little bit closer at the fund structures alone, this is a INREV European Fund Index. For each period, it covers about 300 to 400 funds, and it kind of broadly speaking broken down into a strategy, multi-sector and single sector. If you look at the single sector, that's all of the colorful bars at the top. Over the last 15 years or so, in terms of allocation, the residential has grown from less than 10% to now 18% on the top of the growing market. And there is more allocations also in the multi-sector that are a bit more difficult to break down. So I think the message is clear. Demand and the growth in the institutional residential has been significant. Let's talk about market, because that's where it gets really fun, right? When we think about geographies in terms of size, availability, structure of the institutional residential, there's a lot of differences. And that's what I'm trying to show with this particular slide. So if you look at the dark dots, that's effectively the size of the markets overall in terms of all fund allocations across markets, okay? And there's no surprises there. Germany is one of the largest markets, followed by the UK. There's a bit of currency into play. Netherlands is also a very large market for institutions. I do have to highlight that France is a little bit underrepresented here, but it gives you an idea of which markets are the largest, and that all makes sense. When it comes to applying the same data for residential, you can see how much higher in importance and size the Dutch market is, and partially driven by the fact that the local investors in the Netherlands are playing a very significant role for a while as an institutional investors, but also in Germany. And UK is playing catch up, but there's quite a lot of catch up to be done there. Okay, so we covered the size of the market. I think the one key theme that we're seeing increasingly important from the government perspective, from the kind of demographic perspective, is affordability issues. Now, we have many layers that we need to kind of discover as an industry. First of all, what is affordability and how it's defined varies significantly from one market to another geographically. That's a huge debate on its own. But today I'm just going to show you the housing cost overburden rate, which is Eurostat data that looks simply at the overburden rate for housing across different European markets, and it's defined as the percentage of population that lives in the households where total housing costs, and I mean rent, utility costs, so your electricity, your gas, and property tax, where appropriate, are more than 40% of disposable income. And the picture is clear, there is some differences across the market. And I think here Netherlands stands out, especially when it comes to 2022 hike. And one of the reasons behind that, but of course I will leave for the panel to elaborate further, is the strong increase in utility costs, the energy costs that we are now faced with, and the role that perhaps the government and regulation needs to play for rent control, where perhaps in Germany the hike is not so great because there is more rent control from the tenant perspective, and that can be managed better. Let's keep that thought and move on into slightly different dimension of the same data set. Now, it's still housing cost overburden that we just talked about, but by household type. And it highlights that the concentration of this burden factor tends to be in a single household, be it a younger, less than 65-year-old, or much older, pensionable age or near pensionable age now. This is where the difficulty is the greatest. And at the same time, as our society is choosing to live in a single units, people taking longer to get married, people are then wanting to have more comfort when they are older. So again, this is a huge problem in terms of demand, supply, and affordability. And I highlight it strongly because at the end of the day, our home impacts our well-being, impacts our ability to make life choices, and that's really important to highlight. Just to make it more fun, actually, if you bring together all the factors that we're faced with, the sharp rise in interest rates, even once they moderate, they will still be at the elevated levels that we got used to. That will be higher cost of capital than usual. We have a construction cost index showing very clearly where costs of constructions are at. And on top of that, we have an ESG agenda for where advanced CapEx is required in order to be sustainable or, in fact, not becoming obsolete or future-proof. All of that combines means that we are challenged as an investor, as a financial sector, to continue to deliver residential because, that the numbers simply don't add up. Yet, at the same time, when we look at the sentiment and the structural shift we see in European market, the demand for living continues to be high. This is our sentiment survey, which we take every quarter, and you can see all of the sectors which are in the positive net investment territory. Therefore, the investors are looking to put more money into the segments, are pretty much a living sector plus industrial and logistic to some extent. As people are moving out from offices in particular and shifting or reducing their allocation, and to a lesser degree retail. So instead of the usual fashion of giving a lot of research conclusions, we are working on a residential living paper from the non-profit organization like ourselves to talk about standards, to talk about definitions, which will be released in November, so you can read more about it. But I would like to invite the panel and give some keywords for discussion, and I think it's demand and supply in balance. Huge issue because we need more housing and yet we're struggling to build it. Affordability and well-being, because it goes hand in hand. If people don't have enough housing or cannot afford it, they can't make life choices, creating a family or staying in a city where they want to be or becoming independent as a young adult. And all of that impacts not only our well-being but our cities, offices, retail, and everything comes with it. And last, but very, very, very important, is that we cannot do it on its own, and the governments or the local municipalities can't do it on their own. I think there is a great need for public-private partnership, and there is lots of things in the toolkit. It's all about access to lower cost of capital, and it can be done with the help of public pooling. It's all about land pricing and zoning and the flexibility of that, and maybe some extent of regulation when it comes to the rent controls. So at this point, I think I've covered the ground, gave you some food for thought, and thank you, and passing on to the panel.
Great, thanks very much, Irina. Let's just do some brief introductions, literally kind of 30 seconds on who we are so that everybody knows. We don't have time to go around everybody, but let's start with you. Michael.
Okay, hello. I'm Michael, so I'm working for Catella and for the European residential team. So we are managing 7-8 billion across Europe, investing in 10 different countries in Europe. So I think we're comparing always different countries and different opportunities within Europe.
Great, Jeroen.
Jeroen Dijsselbloem, Mayor of Eindhoven, since 1 year. New in the job, certainly new in the world of real estate. This is my first meeting of this kind, so I'm on a steep learning curve. And Eindhoven is, for those of you who don't know Eindhoven, the high-tech boom town of the Netherlands.
Great, really interesting. Peter.
My name is Peter Akkerman. I'm the co-head of Schroders Capital in the Netherlands. Schroders Capital is a global real estate investor with over 30 billion of assets in almost all segments. So.
And thanks very much. And so really interesting perspectives here. We've got, the mayor of a city that is innovative, is growing, is high-tech. And also, obviously, we've got in the Netherlands, like we have in the rest of Europe, a really significant problem in terms of availability of homes, of affordability, those kinds of aspects. But we've also then got European investment, who is invested in the Netherlands, and then Peter representing Schroders UK sort of money, global international money, but you are the local person on the ground here. So we'll be able, and the idea of this is really to share some thoughts around it and see whether, where there are challenges and also what the expectations are. And Courtney, pick up on anything that you want to bring in, and of course if there's any questions anybody's got or thoughts they want to contribute, please do. But Jeroen, it would be interesting to get from your point of view, I guess when you're looking at the challenges in terms of the city and looking for investment and the challenges around particularly residential and living, which can incorporate senior living, co-living, all of those elements. I guess, what are the challenges that you've got and what are you hoping to get from investors? And what do you want them to bring to you?
So we have I think in all the major cities in the Netherlands, a huge shortage in housing. Affordable housing, of course, is a key issue. Long plan procedures, some insecurity on national policy level. So what's the policy going to look like? The rules and regulations, taxation. And the international climate has created some unrest or reluctancy on the side of investors. What's going to happen? Where do we want to step in? So I think to get through this period, we need to build long-term relationships. And that's what we're trying to do in Eindhoven, to bring in developers and investors at an early stage, get them involved in the whole planning procedure, etc. So we really become partners, and then we hope that they stay for a very long time. If not as asset owner, then at least ready to start the next project. So to build long-term relationships, build trust, and really get them committed to our city. That, for me, is the key priority right now.
And for those who are Dutch will know that Jeroen, as well as being Mayor of Eindhoven, was also finance minister in the Dutch government and chair of the Eurogroup. So it would be interesting, you mentioned there around longer term planning from government. Is that something that you think is, I suppose, missing at the moment? Do you think there needs to be more of a plan? And then I'll pick up with the investors as well around that.
Well, my understanding is always, when I was a Minister of Finance, that investors can deal with rules and regulations as long as they know what the rules and regulations are and will be for at least, or hopefully, 10 or 20 years. Now, asking that from politicians is a bit much, to ask them to be stable in their thinking for 10, 20 years. But of course, when there is a lot of pressure on the housing market and on the need to build, national politicians will become active and they will create new policy incentives and start changing rules and regulations. And in that particular phase, we are now unlucky that that the government fell apart and we will have elections. So where we really need clarity from the national government, and I would almost say I don't really care what the clarity is, just give us clarity so we can do the numbers and we can start working and planning. Unfortunately, we now have to wait for a new government and maybe a new minister with maybe, hopefully not, new ideas. So that's a hiccup. Let's not be too dramatic about it. It's part of political life. These things happen. It's a hiccup. And I hope that very soon we will have again clarity on the medium-term policies in the Netherlands. And I think that for all of us, local governments, investors, developments, this is a very important aspect. Stable clarity on the terms and conditions.
Okay, good. Peter, let's pick it up from your point of view. You're based there in the Netherlands as well. So what kind of things do you need? Because presumably you will take opportunities to your head of European investment more broadly and say, here, we must invest in the Netherlands. And they will say, oh no, Peter, you can't because of this. But what are the challenges? And I suppose, where do you see some of the things that could potentially change that would help you as an investor?
Well, I think it's clear what Jeroen says, that's the point. But I really have to say it's not a hiccup. I think we are on a level, it's a high alarm, high alert, because investors from outside Europe, in Europe, are absolutely not in any way considering the Netherlands at this moment from an institutional residential perspective. And we started our discussion when we arrived, and I asked Michael, I said, what's your sentiment on the market? And we more or less both said, well, the market is dead. That's what we agreed upon, for the Netherlands at least. And the insecurity, the change of regulation, the high transfer tax, all that has been changed over the last years has created an environment where international investors are absolutely not willing to invest because the insecurity is just too high. People don't know, mid-market rent, all these problems, and insecurity is just, keeping everybody away. And that's what we see. If you look at the numbers, residential investments, rental apartments, it's at the lowest level since years and years.
Okay, and Michael, it'd be interesting to pick up your view on that as well. There's plainly a lack of activity more generally in the market as well, but you are invested across Europe and also the Netherlands. So what's your take on that? What's the differences in terms of some of the regions where you're invested and where you're looking at the moment to invest, let's say?
Yeah, first is maybe the long-term view. So I think we are making for our investors a business plan of 10 years plus then 10 years, because if we make a disposition in 10 years, we have to look for 20 years. So therefore, stability in the market, it's quite crucial. And I think the Netherlands did it after Lehman quite well, so they reduced the tax. So there was no activity in the market at all. They reduced the tax, and there came activity, so there was a bottoming out. Now in the Netherlands, there is a tax of 10%, and so to European-wide, we have a tax of 2 to 6%. So it's only one piece, but in the end, the first reaction of investors, okay, I lose immediately 10%. How should I invest in the Netherlands? So it's completely independent of the city. So this is one of the starting points where I think the Netherlands currently starts quite negative, where they did 10 years ago quite good steps to activate the market. So that's maybe one of the main points. Because inflation rates, interest rates is across Europe. We all talk about 4 to 6%. Was not a free choice of all of us. Interest rate is 4 to 5. You can get an Apple account for 4% interest rate. So to activate capital, because the pension funds, insurance companies, they are responsible, they are fair paid, but they are not paid to take any risk. So they need also this long-term view. So
and it's interesting, Courtney, because you picked up in the introduction there about we've had several sessions on livability in cities, investment in cities, and that's all come through in essence that what they're looking to invest in is cities like yours, Jeroen, in a way. That's something where there is technology, there's a lot happening in terms of innovation in the city, that livability is a prime part of it. That's come through quite strongly, Courtney.
It has, and what interests me was Jeroen mentioned in the panel yesterday about your major companies and how they're hiring, in some cases, hundreds of people a week. And then if you have domestic companies thriving, but then you're also very successful at attracting FDI, but that creates a kind of demand issue, doesn't it, for housing? Do you see that as a constraint, or does this come up, in conversation with the companies that you're looking to attract?
Absolutely. So we are, the economic growth now for 10 years in Eindhoven is double the Dutch average, and I think we're 4 times the Dutch average at the moment, but that could be a temporary thing. But the region is booming, and this has huge effects, of course, on the demand of housing, demands of doctors, the demands of schools, all these aspects. The good thing is that our big companies are very much involved with those issues. They're not saying you have to deliver the houses and let us get on with the economic side. They are saying, look, this is a joint issue. So we're now they are setting up a fund in which they want to try and stimulate housing projects.
Okay, that's interesting.
So for example, if there's a lot of insecurity about demand, how many of the houses or apartments that I'm going to build are sold at the beginning before I start building, they can step in and say, well, I'll give you a guarantee. Okay. Start building now, and I'll give you a guarantee on the offset or the number you want to. So they are helping in real financial terms for us to keep building going. Mm-hmm. And this is a public-private partnership that we're doing in Eindhoven that is not seen anywhere in the Netherlands. And I think it's a very interesting example for perhaps other cities to really get the private partners in their cities involved. Because building is not just a social issue for the government to take care of, it is a real material interest for our companies. ASML in Eindhoven cannot keep growing at this pace if we don't have the services, the amenities that their staff needs. They are bringing in their whole family to Eindhoven. They have kids that need to go to school. They need to have the houses. So the economic potential of our region is massive. It's super impressive. We can only achieve that potential if we manage to build the houses and create the services and keep the mobility going. And they are very much involved. Real public-private partnership.
And Michael, go ahead, Peter, if you wanted to pick that.
No, I think that's a very good point, because I think if we really want to stimulate the residential market, and especially the mid-market rent and social housing, then there needs to be an increasing cooperation between public and private. Because mid-market rental apartments, social rental apartments, it's an investment for institutional funds for a long term. It should not be in the hands of private equity. It should not be there. It should be in partnerships where there's a long-term view, so that it can be facilitated, that those pension funds, investors can make a decent return, and therefore we need to have cooperation from that perspective. And that's now not the case, because the regulation that's being applied to the market is just a one-way traffic. And if we do it another way, this is a great example. I think we will be able to create those projects. where it is needed. And that's something that we should really consider in the Netherlands.
I think what that, sorry Richard, what might highlight, which is a question I have, is how much can you separate the city fundamentals and also from the national picture? Because as a city leader, your hands are often tied by national legislation, but the national, let's say, business environment or climate. But it sounds like the fundamentals in Eindhoven would be quite attractive. And that's a question, I guess, for you in terms of how you handle that, but for the investors, and how much can you separate the local fundamentals from the bigger national environment?
So I think this is quite a challenge. So if the sentiment, as you describe it, looking at the Netherlands at the moment, is so negative, it's quite difficult for a city leader to then have a strong pitch, strong enough to rise above the negative sentiment.
Yeah.
Having said that, the only thing we can do, and we have no other option, is to think of any kind of innovative way to do the procedures, innovative ways to work with the private partners in our city, to bring in the provincial government to help us. So we are building deals with all other governments that we need to work with private partners, to keep the process going. We have no other option. The worst outcome is, of course, we have a very strong economic ecosystem in Eindhoven. And for that to thrive, we need to keep pumping oxygen in.
Yeah.
The risk is that it will thrive economically so fast that the oxygen will run out.
Yeah.
So we have no other option than to do this. And wherever it's effective, I will talk to national politicians and tell them, well, look, 10 years ago, this is when I was in government, we got it right. So let's try and get it right again. But there you go.
They love to hear that, by the way.
And it's, if I may, because I think it's not about the regulation itself. Everybody recognizes, also I think all institutional investors, that rent regulation should be there. But it can only be there if you facilitate the amount of new apartments that are being built. If you restrict it, what's now taking place, then it's going to be a big problem. Investors will not come in. So we need to have that dialogue and create those cooperations, I think.
And it's interesting, Michael, because you were talking about some more flexible planning that you were now being able to benefit from in terms of the French market. And I thought that was quite interesting because it's certainly not there in the UK and in other European markets. So it may be interesting just to point that out, I think.
Yeah, that's maybe two things. One is on the government level. So in Germany, we have the KfW. So if you're a state-owned bank, which in the end helps developers, investors to reduce the financing. So you're getting maybe 50% discount to the normal market financing, which helps if you are building energy-efficient buildings. So you get good new buildings and you help to finance this. And 4%, they pay 2%, 2% they pay 1%. So it's quite simple. But this is more on the government level. I think we are working in France together with the city of Bordeaux, which starts an area where you are getting a building permit without a specific use. So it's because we have, for example, also in Eindhoven, the old Philips building, 10 years ago, we converted them to a student housing. So, but this was quite a tough job because it was an office building, now student housing, because the demand in student housing is quite high. And in France, we started in Bordeaux, and there's no permit. There's a building, the first 4 floors are offices, 6 floors are residentials, and after a certain period, you can turn it like you wish, because there's no specific permit. The real advantage is that we have not to tear down the building in 20, 30, 50 years, so the building itself is going with the tenant. And this is quite straightforward. And last week in Paris, there was 4,000 notaries in France that voted for this idea. So it's really a journey. So from a city level, it started in Bordeaux, it's now on the country level, that France is thinking about to establish in areas this permit, which is flexible, and this helps us also in the CO2 discussion, where you not have to new build something, so you really can transform the building itself. And if the developer knows that the building maybe can be used in an office, they will construct it in a different way. So they will not go for this side or for that side. So they will have a building which is flexible over the next 20, 50, 80, 100 years.
Yeah.
And this is coming from a city, and it's now on the country level.
And I just wanted to address that point of flexibility, which is time, sadly, is not flexible. And we've run out of time, not least for you to be able to get your plane, so you have to rush off, Peter. But also because there's going to be an interesting discussion, which is going to be around PropTech and digital twins coming up immediately after this. So if you're interested in that, do feel free to join. Everybody will be here, so please do join everybody for discussions if you want to contribute on anything on those, because I think that was a really fascinating discussion, and I hope we do the same next year, and I hope things have moved on in a way, and that maybe these sorts of discussions can be part of creating a solution as well. But thank you to everybody for being here. Thank you to Holland Metropole as well. Really interesting to hear all of your views. That was great. Thanks very much, everybody.
You.